Thank you for joining me, everybody. So please let me know how I can help you become a better trader. I come on every morning and I talk about my positions or the SPY or what I'm looking at for the day, this or that might influence the market, some data, maybe CPI coming out or mortgages or inventories tomorrow. But I want to help you become a better trader. So I'm going to share my flaw is anxiety. When I have money on the side and I haven't entered into a trade or I'm not holding any positions, I get overly anxious to enter into a trade. But that's not the key to trading. The key to trading is choosing the right strategy, is choosing the right entry point. And then even when you choose the right entry point, use your own data, my spreadsheet. Okay, remember, Ask Matt, Google it. Ask Matt episode, I think it was 52. All right. But I talk about my spreadsheet. So I miss minimum entry, meaning I'll pay $2 for a contract and then it'll go down to like 160 and I'll be like, I'm off 20%. But on average, I probably miss anywhere from 12 to 20%. If I really screw up a trade, I'm off 50%, like my Apple trade from what was it? I think Thursday. Right? I bought one contract, then I bought 9 contracts. And then when I realized how bad I missed and Apple was stabilized at 135, I bought 37 more contracts and I crushed it. I'm only holding TQQQ. And I talk about my trades, but understand I want to help you. So please ask questions on the side. Let me know how I can help you. If you want to help yourself, ask Matt, Google it. Ask Matt. We used to do these episodes where I would teach a lesson every first like 15 minutes. And then we talk about trading for the day. But the best episodes were, and they're easy to remember. It's not like Powerball, 27, 32, 37, 42, 47, 52. That's it. Start at 27, go up by 5. All right. It just happens that it worked out that way. I don't know. Maybe it was every Monday or every Friday. I got to plan better. But it'll help you. You only have to watch 15 minutes and you'll be like, oh, the nibble. Oh, wow, I saved 18% on the way in. Every time when I get anxious to sell a trade, I'm like, oh, it's spiking. I could get $1.80 for my position. But when I look back, I could always get 10% more. So yes, I wanted to secure profit, but I always cheat myself out of 10%. So I nibble on the way out. So if you find yourself doing the same thing after you make a trade, if you see, like, I'll use my Lucid example yesterday, sold at 124. I was in at 98, 99. It went to 91 after I traded it, meaning I was off like 9%. I could have saved $8 per trade. And then when I sold at $1.24, it was $1.30 something, $1.32, $1.33. I'm like, there's $9 per trade. Okay, so on the way in, save the money. On the way out, make the money. All right, I try and give tips like that, or I used to. Now it's different. Nobody asks questions. I wish you guys would ask questions. Hey, Matt, I struggle with this. So I told you, I struggle with anxiety. I can't wait. I see something and I get so overly anxious that I need to jump in. And that was my one bad trade on Friday, and I apologize for that. It was the worst trade I've made all year. Surrounding that, I made 9 trades and I'm holding TQQQ overnight because I figured tech could be strong. So what could influence the market? Let's get into the market. Let's get into the strategy session, okay? So I mentioned yesterday with midterms, which are today, people are voting today. If Democrats win, the market tends to go up 10%. If Republicans win, the market tends to go up 11.7%. If it's a mixed result, House is Republicans, Senate is Democrats, generally the market goes up 14%. So understand, the market tends to go up. We understand that. We're going into the close of the year. Now, here's the important key factor for today and for the rest of the week. There are a couple key factors, but we'll talk about the SPY. So the SPY closed at what? 380 yesterday. Who predicted that? This guy right here. Now, what am I predicting today? It's tough today because at 381 all the way to 383, there's supply zone. Now, let's talk about what that means. It means when the SPY gets to a certain point, there are some banks and some institutions that sell their shares of the SPY. They're selling whatever it is that make up the SPY, Apple, Microsoft. They're all coming up to certain levels that are very important. So what could potentially happen? Bull case scenario, okay? We don't have CPI till Thursday. And if CPI numbers come in light or, coming down, remember, we went up the previous month. We went up and up when we were supposedly over the bell curve already. So bull case scenario, CPI numbers come down. The SPY will break through, obviously, leading into CPI. So we'll see the SPY at 381. Key level, 381 flat. If it breaks north, and again, it should have a struggle because there's a supply zone. But if it breaks north, I'm giving you bull case scenario, you're going to see 385. After 385, you're going to see 390 really quickly. Now, that's your bull case scenario. So understand, things can move quickly from 384 to 389. That 5-point range, once it breaks supply zone, can shoot right up. All right, so be prepared. Bull case scenario. Bear case scenario is CPI numbers are coming out on Thursday, but yet tomorrow morning we have mortgages, which should be going down because mortgage rates are like a 22-year high and mortgage applications are like a 7-year low. Might be worse by now. I think those are the numbers last month. I mean, people aren't buying houses because mortgage rates are going up. Say you needed a mortgage. Let me explain in simple terms. Say you got a mortgage of like $400,000, $500,000 on your house, right? And it used to cost you $1,600 a month, right, for your mortgage. Now that same mortgage would cost you $4,000 a month. An extra $24 because rates are going higher. An extra $2,400. Your rates, your mortgage is like your payment's doubling. So anyway, that's what's going on. I expect mortgages to come in tomorrow, push the market down. I'm expecting inventories to come in still hot. I know companies are working at reducing inventories, but they should still be somewhat substantial. So that could push the market down. So yes, we're seeing bull run right now, and the bull run could push higher, could push to 390 by CPI. Then you have 393, 397, 401. Yeah, 401 by like next week. Bull case scenario. Bear case scenario is we're going to fill that gap at 358 on the SPY. So that's a huge, huge difference. And that's why we saw such light volume yesterday. So as the market was going higher yesterday, there were selling of the stocks that were going higher, but the volume was so light, which tells me and should tell you that there's a ton of money on the sidelines. So again, don't get fooled. Prepare yourself for CPI. But if CPI comes in light, they probably will push the market up, and you probably will see 400 on the SPY, 401, not on Thursday, but in the upcoming weeks. We just had midterm elections. As long as there's no like crazy scandal going on with voters and voter registration or whatever, the markets will likely push higher, assuming CPI is down. If CPI is hot, which a lot of people expect, a lot of people are expecting CPI to come in hot, job numbers to stay strong, the Fed to stay aggressive, and the markets to go down. That's where sentiment is right now. So if you polled people, 7 out of every 10 people would tell you we're in a bear market and we're going down. But it is teetering. So even as we sit at the SPY, probably 381 pre-market because that's a teetering point. 381 on the dot. How crazy is that? Can I share that with I thought I got rid of everybody. Let's share it. There it is. 381 pre-market. Okay, 381.06 now. Why is that interesting? Okay, so here's what's happening. See this right here? That's how we opened the day yesterday, okay? Strong volume, okay? It was buying. See how we closed the day yesterday? Strong volume. All that BS in between. Very light until the last probably 2 o'clock. These are all strong signals. These are 5-minute charts. If we went to the 3-minute and looked at the last 2 hours, you could start right here. All the volume was inflow. So that was telling me I'm holding my position overnight. Now, what did I do yesterday? I sold my Lucid and hold my TQQQ. Why? They both move together, Matt. Any idiot can know that. Yes, but it's safety. Again, I started another $500 account in Robinhood. I made some trades. I got rid of half of them. I wasn't carrying everything overnight. I like to day trade. Robinhood doesn't let you day trade. So what did I do? I lightened up the load. I got rid of 2 contracts. I'm holding 2 contracts. And then I'm holding another 14 contracts in TQQ, 10 from the other day and 4 that I bought yesterday. All right. So I see some questions. We're going to get to those before the end of the video. We'll talk about the SPY. Okay, so the markets, the SPY, your pre-market stocks, whatever stocks you're looking at, look at them right now, okay? If they're up 2%, 1%, they're down 0.3%, wherever your stock that you're watching, and you're like, what do you mean, what stock am I watching? This is a lesson I've taught. You shouldn't be watching the whole market. If you don't have investments, there's no reason your watch list should be like 38 stocks long or 100 in some cases, and you know who I'm talking to. Your watch list should be like 4 stocks and maybe add an Apple and Amazon or Google just to see what the market's doing. But that helps you familiarize yourself with these certain stocks or ETFs so you know when they're plateauing, right? And you should get out, or you know when they're bottoming and you should get in. And I mentioned this week, I was only going to be trading TQQQ. So at 1691 on Friday, I got in. I only knew that because previous trade from the week, I got it at 714, which was kind of a base. So even though I didn't call the absolute bottom, my last trades were 1714, 1691. I knew was a good point to get into tech, right? And then I even got in yesterday at 1747 and 1745 because I knew the TQQQ was going higher. So as we sit pre-market, I know that's doing better than the Dow and the SPY, right? It's up 1.5%. It's at 1886. So I'm talking to you about entry point. Entry point was $17.14, 1691, 1747. We're up to 1887. Am I chasing? No. So I'm hopefully going to get the best exit today. The best exit, let's go into strategy session. The best exit for my current position, and maybe you guys can plan accordingly for yours, is knowing that inventories are coming out tomorrow and mortgages tomorrow and CPI on Thursday, knowing that volume was light yesterday, knowing that there was selling into the light volume, I'm going to actually sell the spike. I'm not going to puts because puts are fighting the market trend. We're in a bull trend. I don't trust it. So what am I going to do in the morning? If I'm in my TQQQ, right, I'm going to look for the best spike. The best spike, plus it's early. I'm getting time, right, for the next 4 days because Tuesday will count. So I get about 10 cents a day on my contract. That's my IV, okay? So that's my exit strategy. I don't know exactly what it'll be. Hopefully 19 and change. And then the strategy is if I want to buy the same contract, I'll wait for later in the day when maybe it's like $18. It's down 3%. Why is that? If I'm going to take a lotto play into CPI, again, I'm not trusting CPI. So what will I do? I'll probably use a day trade tomorrow. I might ride something overnight from 3 p.m. or 3:50. I might get in last 10 minutes of the day and ride it to the next day. So somebody asked, what's the best time to trade? I don't know the best time, but I'm going to tell you my strategy on how I follow the market, okay? So I mentioned this before, 9:30, the institutions already have their orders in place. So the majority of their investing is the first 15, 30 minutes of the market, last 15, 30 minutes. Those are the institutions, okay? Throughout the day, that's retail, that's other orders, that's large orders coming in. Now, how do I trade? From 9:30 to 10:30, I don't want to touch anything. I can exit out of a position if we see a morning spike and I think the market's going to go down, like possibly today because things have been strong and we're a bear market, but we're in a bull run. We have CPI coming out, mortgages, inventories. Earnings haven't been that great. So yeah, I'll take the bump this morning, whatever we start at, and I'll plan accordingly. I'll get out. Now, if it goes back down, I might take a flyer and go out a week or two, right? And go, okay, just in case CPI numbers come in cool, the market's going to shoot up. So again, scenarios, the market, okay, back to timing. So 9:30 to 10:30, I'm not touching anything. 10:30, I start to get my strategy together. Okay, here's what I think I'm going to see in the market today. Here are the points I'm looking for in the SPY as a support level. And if I see support, I'll know I could jump into bullish positions. If I see rejection, and it kept rejecting 380, right? 378, then it rejected 380. Well, I'm telling you, there's a supply zone between 381 and 383. If it breaks the supply zone, right, we're going to shoot right up. So like all these positions, and the TQQQ did that yesterday before close. From 2 p.m. on, it was like straight moonshot. Okay, so yeah, that's your bull case scenario is you break through the supply zone and you go to 385 on the SPY, which was actually going to be my prediction based on yesterday's data. Yesterday, the SPY went from 375, which was up 5 points from the low, and 380, which is up 2 points from the high, right? And it's almost a similar pattern to the day before. So if we see yesterday's low and add 5 points, we're now at 380, top level 385. That's a very narrow range. Again, low volume, okay? And we have more information coming out this week that's going to tell us whether we're still in a bear market or actually should we believe this bull run. Because if you've made your decision already before CPI numbers come out, this is ridiculous. CPI is going to tell you whether the Fed's doing a good job with soft landing. If they're not, if inflation's high, the market's going to shit on itself, and you should be prepared for it. Now, I'm not saying that's it, but it would have to fill the gap on the SPY to 357. Why? Because gaps are filled. So there you have your bear case scenario. I'm going out, let's say, a full week right now. I'm saying if I'm a bear, 357 is going to get hit. All right? You're hearing it right now, snapshotted, okay? If I am a bull, and I'm saying 357 on the bear side and we're at 380, so that's 23 points. That's like 6-7%. If you're a bear, 6-7%. Is it going to be that good if you're a bull? Let's say CPI numbers come in cooler and they're like, oh, wow, we're under, a number with a 7 in front. I don't know what the estimates are. I haven't heard, but I'm assuming something with a 7 in front would be good because we were at 8.3, 8.5, 8.2, 8.1. Something with a 7 would get people very excited. But let's say that happened and we get a bull case scenario, which we've seen buying and we've seen money on the side. So we've seen light volume, but we're pushing right now 381 supply zone. Past there, we're going to 390 where we already were before the Fed spoke. So if we go to 389 or 390, understand we were there last week before the Fed raised rates, which they knew they were going to do. So all we did is crater. So would it surprise me if we run to 390? No, not at all. Why? Because that's what the market does. It's just a huge crater. It's like when a stock sells off and you're like, wow, they really shouldn't sell off. And then it craters back up. Now, it doesn't mean we should do that for all stocks. Somebody mentioned to me, one of these companies, it might have been Lyft. Lyft was off, like 20%. I mean, there were a couple of them. Lyft, Take-Two Interactive, and another one. You have to look at the ownership if you're going to look. Just because a company falls a whole lot doesn't mean it rebounds right away. Company like Meta, sure. Amazon, okay. Tesla hasn't happened. Tesla still has downward pressure. I thought 185 was a fair number. We ended at 195, I think, yesterday. And Tesla was down like 10 points, like 5% yesterday, whereas I think the market was strong, right? I mean, there was a nice rebound. So understand, I showed you what I'm looking at yesterday, and I'll bring it up again for the new people, okay? So I've got yesterday's chart up, right? The 3-minute chart. Let's go to the 5-minute. All right, so what can you see? 5-minute chart. Let me give you guys the full screen. I'm going to circle two things. Oh, you can see them nice and big. What do we see at market open? Huge influx of buying. Why? Because institutions buy. When else do they buy? End of day, right before we close. What did we do in the interim? There was give and take. We went down, we went up. But towards the end of the day, there was definitely strong buy signals, which is why I held my positions overnight. Would I have been smarter if I held those 47 Apple calls? Hell yeah. I mean, I bought them, and this is a lesson for everybody. I bought my first Apple call when Apple was 140. Dude, it's not even 140. It's down here now. I know, but I still made money. How? I bought one call at 140, paid $275. It went down 10 cents. I was like, steal. I'm going to buy 9 more at $265. Then it went down, and I was like, okay, support should be at 135. And what happened? Apple went to 135.02. I said it should be support. And then it went a little lower at 135. My contracts were trading for $131. The same ones I bought for $275 for my first one, 9 more at $265, $131. I'm like, okay, how much money do I have? I'll buy 37 contracts. It was like, 5,000 and change. And what happened? Apple went to $240 on that contract, $240. So my average was $159. It goes to $240, right? So do the math, 160 to 240, $80 a contract, 47 contracts, $3,200, $3,720. I didn't sell at the top. I wish I could claim I sold at $240. I didn't. I sold at like $2 because I'm not the best at that. If I used my nibble strategy, I would be like eager to sell at $2 and be like, let me add 10% to it. So that's what I do from now on. That was the last trade that I made where I didn't use my nibble strategy. Even though I think I'm going to be right, I tell myself, okay, I'm going to pay $1.50 for this. No, I'm going to take 10% off and pay $1.35. And guess what? I always get the contract. So the next time you're buying something, just try it once. You'll be enamored. You'll be like, oh my God, I watched this dude for 20 minutes. And now every time I buy a contract, and it works on smaller contracts. Say your contract is $40, right? 40 cents per contract, $40 a contract. You say to yourself, 10%, he told me. All right, instead of $40, and it might be trading at 44 at the time, you might already be taking 10% off. Put in for $36. Say to yourself, I was going to pay 40. This dude's telling me I could buy it for 36. Let's see if he's right. I was going to buy 100 contracts. I was going to buy 50 contracts. However you trade, do that. The same way on the way out, guilty, but changing it. The next time you're going to sell a contract, you're selling something like me this morning, TQQQ, right? It's going up 18.91. It's spiking pre-market. It's up 2%. I'm going to plan accordingly. I'm going to say if it goes up 4%, that's a good exit for me. That would be another 40 cents, $19.30. There's my exit strategy. I have the $17 calls. They're going to $19.30. I'm going to get $2.30 per contract, plus I'm going to get 10 cents for the remaining 3 days. So I'm going to go $2.60 per contract. These are the same ones that I mentioned I bought, right, for $1.45, for $1.47. Now I'm going to ask, my exit strategy is 230 plus 30 is 260. So 260, I'm looking for like 89%. Seems like a good trade. I have complete strategy. I didn't come up with my exit strategy. All I knew is the market closed strong yesterday. I wanted to hold overnight. Futures are strong. So I'm saying to myself, if mine doubles, right? And again, TQQQ is a 3-time bull ETF. So the QQQ only has to go up, a third of that. So I'm looking for 2%. You're talking about 0.7%. TQQQ get hit, get my exit strategy, get $2.60 per contract. Do the nibble because I was willing to take less, but I'm going to make the extra money on the contract, and then I'll wait on the sidelines. And if you wait all day, so let's go back to the timing. Somebody asked me about the timing. 9:30 to 10:30, I stay away. I start a strategy around 10:30 a.m., 11 a.m., all right? I'm deciding what to get into, why, what my exit strategy is, and whether it's going to be a single day trade or a scalp where I hold overnight. Now, lately, if I hold overnight, I don't want to enter the trade until I know that I will be correct, because we've all seen some shady stuff happen at the end of the day, spike up, spike down. Yesterday, I was bullish, so I held overnight, and I held after that spike. I mentioned at 2 o'clock or 2:30 spike. Oh, it's a good spike. I kind of want to take profit, but I think things will get better in the morning, and I anticipate a gap up. If I didn't have the strategy that there was going to be a gap up, I would have sold and took profit. No doubt about it, especially when you're growing a small account. But if part of your strategy is markets finishing bullish, that should lead into tomorrow. There's no real information or earnings. So let's look at earnings plays today, right? Disney is reporting after hours, okay? And we still have CPI coming in. So I was actually looking at 2 Disney positions already. I said to myself, Disney's, I think, $100 flat. I said they might like Disney. Disney might have openings. I'm not sure where Shanghai is. On the bull case scenario, I could see Disney pop to like 111, 112 tomorrow. That would be like a 12% increase from where we are right now. The $110 calls, I think, are $1. So I'm like, I'd make 100%. Bear case scenario. Let's say Disney disappoints and takes down the entire market. Because understand, if Disney disappoints today, streaming companies can go down, entertainment, return to society, plays, things like that. Maybe even Chinese companies. Who knows what they'll associate Disney with, because it might be Disney China that's bringing it down. Who knows? But if Disney goes down and you're sitting Disney at 100, I was looking at the $90 puts. And I think they're under $1. I was looking at the activity to see if they're open or not. And then I said to myself, maybe I'd go $91, something to that extent. But you could always play both sides, anticipating a big move. All right. Now, who makes money when you play both sides? The institutions. So understand that as well. What other questions we have? Do support levels on the SPY go up 2 or 3 points? Generally, I like to look at dark pools, but I try and give you those dark pool levels. So right now I can tell you it's 3 to 4 points. It's almost like 0.75 to 1%. So when the market was going down, I'll give you the support levels on the way down because I kept mentioning at 375 we'd probably see support. Under that, it was 371. Remember, when we were cracking 371 on the upside, it took like 4 attempts before we broke through, and we saw 375 that day. So 375 used to be rejection, then was support. I mentioned 378, only 3 points higher, right? It was rejection. It rejected 3 times the other day, but then it turned into support, right? And 381 should act the same way, but 381 was hit pre-market. I believe that's where we're at the SPY right now, 381.30. When we started this stream, it was 381 flat. So it's got a little more bullish. And again, I think my position on the TQQQ could double and go up 4%, if not better today. So with that assumption in mind, and again, I want to get out of bullish positions before I hear the numbers tomorrow morning and definitely before CPI. If you are risk averse, you don't care about risk, and you're like, God damn, I'm going to be right, then you can hold your positions through CPI. Because if I held my TQQQ through CPI and I'm correct, like CPI is down and the market skyrocket, then TQQQ could be at like, and again, it's at $18 right now pre-market. It could be like $22 or $23 come the end of the week if the market's bullish. So, I mean, that's a chance. And I'd be like, wow, I'm giving up 100%, but I'm securing profit. Do I see Apple pulling back? So it's a great question on Apple because I was in Apple calls. I'm sorry I sold them. I would love to still be holding the position this morning, but I would sell on the spike. The same way I'm considering selling TQQ on the spike, I would consider selling Apple on a spike. However, Apple, unlike Amazon, Netflix, Google, has had strong demand, and they're still buying Apple. The reason I sold is because I was intimidated by seeing the people walk out of the factories in China. They basically did a walkout on Apple, and they said Apple wasn't going to manufacture and produce enough goods come the end of the year. But again, that's one company that institutions want to own. That's one company that gets bought up on every dip. So it's really going to depend on CPI. You say pulling back between now and next Friday. We'll say Apple's at like, let's just say around 140 because that's the number I like to use. There is support on Apple at 135. However, if CPI numbers come in hot, you could probably see Apple crack 135 going down. All right, that's your bear case scenario. You have to understand both scenarios. Don't have a crystal ball. I'm just telling you what's going to happen based on CPI, which comes out Thursday morning. Now, bull case scenario is Apple's going to crash the 140 by Thursday. It'll probably be like 143, 144, maybe 142, somewhere in between 142 and 144 by Thursday. It'll flicker in between, probably a little head and shoulders. But if the market is bullish because CPI numbers go down, Apple's going to go to 157 right away, 155. I mean, that's what institutions do. They have a game plan just like you and I with their strategy. They have a lot of money on the sidelines, and they're going to listen to CPI and know how the Fed's going to react. Now, here's the thing. You could follow the Fed swaps rate, which tells you how many points the Fed is going to raise in December. Right now, it's probably a guesstimate of like 75. Some people think 50. Very few think a quarter. The Fed is still hawkish. But that is going to change. That number is going to change dramatically as soon as CPI comes out Thursday morning. And I will talk about it. Maybe we'll do a live stream Thursday morning. But as soon as CPI numbers come out, the Fed swaps rate is going to change. And it's going to tell you what the Fed is likely to do in December. So if it changes or it comes 75 basis points because CPI was high, or maybe even 100 basis points, the market will take a poop on itself and everything will go down, including Apple. It'll break that mark, 135. It'll touch 130, 128, maybe 127. If the numbers come down strong enough and the market is extremely bullish, then you're going to see Apple run to like 155, 156 right away. Any updates on the small account challenge? Should we do another? Yeah, I mean, I'm just trading a small account these days. I'm trading multiple small accounts these days because every time I announce a challenge or something, I choose the wrong position. I've had 10 trades out of my last 10 trades. The one I choose for my $500 account was a bad trade. It was probably my worst trade of the year. My 9 other trades returned like 60 to 160%. But I chose the wrong one. So I'm not going to title anything small account, 100 account, 500, 1,000 account. I'm just going to transparently share my trades, which I've been doing since I started trading, publicly like a year and a half, 2 years ago. I'm in 2 calls here. I'm going to buy 4 more here. if this happens. I mentioned yesterday when the TQQQ was 138 and I bought it at 145, that if it goes down to 134, I was going to buy 4 more contracts. It never went there. But I was telling everybody my plan. If it went down to 134, I was going to buy 4 more contracts. It went to 137 as a low, and then it bounced. And again, it closed at 190 something or 188. So if you got in at 145 or even better, 137 or 138, let's say 140, you're talking about 50 cents. You're talking about 35% going into today. We're gapping higher 2%. I'm going to get at least 55% out of that trade. And that's all I was talking about. I was talking about that in Lucid. I was in Lucid 98. It went as low as 91 after I gave my alert. So that's 10%. Let's say you got it at 94. I sold it at $1.25. That's 30 cents. It's like 27%. It's a good trade. Where do you see the swap rate out? Google. Anything you have a question about ever, don't listen to someone unless they're an expert on it. What's an expert on it is your phone. Google. You go, hey, how can I check out the swaps rate? And it'll say Fed swaps rate, and you click on it and you'll read a little, like 2 minutes. I'm sure there'll be a YouTube video. Someone's got to shoot a YouTube video. To me, it's pretty boring. It would be too technical, so I wouldn't shoot a video like that. All right, any other questions? I guess not. I love when there are no questions. So good luck, everybody. Again, my prediction on the SPY today would be 385 on the low side. If it breaks 385, we're talking about not 385 because we're at 380. 380 on the low side and 385 on the high side. That would be it. But if we break the supply zone, we can see 389. So really, I don't want to give a prediction today. I mean, I'm just going to be watching. You can't really make a prediction of the top or bottom. I can tell you if we break 381 and break the supply zone, which is 381 to 383, 385 is in sight. If we go to 385, it's likely we'll go to 389. If we get down, so what you'll see happen is 381, 383, it'll reject. It'll stay in that level. If it rejects, we will go back down and test 378. So if we're testing 382 pre-market, let's say, or 381, and then it tests 383 during the market and goes up and rejects, we can see 378. We can see 5-point swing on the downside. So I'm preparing myself for both. The fact that I know that there could be a downside swing today, just for the hell of it, I'm going to say I'm going to get out. If I get 4% on mine, that'll give me like a 65% trade. I'll be done with it. And then if we do swing down, even if I miss the swing down, because sometimes I don't chase. If I'm like, damn, I should have bought a put and it's going down and I still think it'll go down lower, I'm like, let it just play out. Because you have no crystal ball. You don't know if you're right. So when you chase, you're already losing half your profit. All right. I will see everybody on Discord. Appreciate you joining me. Long day ahead of us today. Lots of money.